The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 15th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance. That's what life's all about today. You and I, we get to go look at the circumstances of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free, pick up that phone, dial on in. I know the heart's going to beat a little bit faster. That's okay. I'll calm you down. You can be a co-host with me. So give me a call, 877-927-6648. Internationally, 727-445-1044. That way, you and I, we can go surfing around whatever it is that you're trading and try to figure out what the bulls and the bears are communicating to you and I on this fabulous Friday. Of course, this is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 486 points. She's trading at 15,892. S&P down 56 points at 1865. NASDAQ Composite off 169 points, trading at 44.45. Russell 2000 down 37. Gold is up $17. Silver's up 16 cents. That's it. Interesting in the metals market. Platinum's off a little bit. Light sweet crude, I guess, maybe I have the wrong contract up there, but light sweet crude, that's off $1.87, traded at 29.34. Natural gas back up 4 pennies. Leading the charge to the upside, it's, Chipotle's still hanging in there, individual stock-wise. Otherwise, it's nothing more than ETF structures that are on my system. To the downside, a little different story. Priceline is leading the charge to the downside, $32 off about 3%. Google's off 3.5%. Off $25. Amazon down $22. That's off nearly 4%. Sarepta Therapeutics, that's off 50. Not that you know, but it is off 56%, down nearly $18. AutoZone down 12. So let's go figure out what these markets are doing here. Let's use all of our tools. Well, obviously, they're headed south. The question is going to be, where are they headed to south? So where should we begin? Here's an interesting chart that I put together. Let's take a look at this. This is the S&P 500. If you're watching us on TigerTV, what you actually can see here is you're going to see 11 different rectangular blocks that are on my screen. Those blocks represent each of the down thrusts off of the 2007 top. So there were basically, if you go back to 2007 off of the high, and we can do that, but I don't want to waste your time because I really want to get into these markets here. Each of these are the different measurements of each of the different thrusts to the downside. Now, what's really interesting about this, as I blow this up, our high out here inside the S&P 500 coming in on July 20th. And we can see that first down thrust, I've got labeled as number 5 because it was actually the 5th down thrust. So they're a little bit out of order. It's a little bit of the Rubik's Cube out here, but it is interesting to see how these thrusts are actually matching up right now in 2015, 2016. You can see that we had the 4th down thrust back off the 2007 highs, happens to match our 2nd down thrust out here. Number 2, back in 2007, happens to match, in essence, our 3rd thrust to the downside. Look at how all these are matching up here. So where are we right now? Well, we're in what looks like down thrust number 7 back in 2007. 9.97 off the 2007 high. And that says that the market ought to be, if it's going to follow any type of pattern with regard to, what do we want to call it, harmonics out there. We're getting relatively, interestingly enough, off of the high out here. This is the one from December 29th. If we take that thrust, which we appear to be in right now, number 7, from back off of 2007, says we're right around the 1840-ish area, which really takes us right into that October 15th. This is the S&P 500 2014 level. That was that Ebola scare out there. Now, we're not going to use these as being exact to the tick out here, and that says that we're really close, or we should be really close. You got a nice little hammer candle back here on October 15, 2014. That may hold that support. Maybe it doesn't, because if this thrust right here, if these thrusters really get rolling, maybe it's not number 7. Maybe instead it's number 8 or 9 out here with regard to the type of movement, if we're just following some type of analog-ish type pattern out here. In any event, we'll continue to follow that. Now let's jump in and take a look at what the markets are or are not doing. And what you and I are going to do is we're going to get rid of the emotion, negative or positive emotion out here, and we're just simply going to go ahead and look at patterns. After all, that in essence is what we did right here. So let's take a look at short-term charts, what's going on. Let's look at the NQ as an example. Now, the NQ, during the past 3 sessions, what we'll call the last 2 tops and bottoms, here's the pattern that was out here. The last high that came in was back here at about 4 o'clock in the morning. This was on January 13th. And as price was moving higher, 30-minute chart that you and I are looking at, price was moving higher, doing it with less relative strength. Also made a 7th inning stretch candle out there, letter number G, right? That identified the market top at that stage. Price moves lower into yesterday, and what does it do? Off of that same high, gets into another 7th inning stretch. Price moves lower, in this case, with less relative weakness out here. Nice old bullish engulfing candle that happened to show up, the cavalry, to let you know the cavalry was in. And voila, the next low. Of course, we've made a lower low here. Now, yesterday's counter trend rally, clearly just a counter trend rally out here, only got to wave number 2, just made, looks like a 0.618 to 0.786 retracement out there, or ran into some other resistance that we could easily locate. But let's just take a look at where we're at right now. Like, you're not going to get any of this on CNBC or Bloomberg or any place else out there. They're all scurrying around trying to grab their head and pull it out of I was trying to think of something positive to say out here, out of the clouds, to try to figure out what's going on in the market. You and I, we just look at these patterns because they repeat over and over. So we've seen the markets move lower into the 1 o'clock time frame. And this is the NQ, moves lower, does with less relative weakness out there, gets down to a 7th inning stretch out here. Look, the bottom for the day may be in, is likely in as we speak. Who else is communicating that to you out here? And you may say, I am totally out of my mind. And I am out of my mind, but in a positive way. So here's the pattern that is in play. Now, during this next 16 minutes, price could push lower, and this pattern here might extend to the downside. That could continue. But at this stage here, things are relatively stretched. And the likelihood that we just saw the bottom out here for the day, I'd have to give it a pretty good chance after all. Look at the screen in front of you. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're looking at the 30-minute chart out there for the NQ. If we take a look, this panel right here, we've got the 30-minute chart for the NQ. That's in the upper section. The middle panel there is the S&P futures, the SMINI. The bottom panel is the Dow futures contract. So you can see all of them on the 30-minute basis, all moving lower with less relative weakness out there. That is not exactly what you would have thought. I had the tube on, the boob tube on, when it seemed like they were freaking out here, and I was saying, hey, tune into TFNN because we could teach you a thing or two. If we were just simply tuning out all the news and you and I were just simply playing the money game, looking for patterns to help us identify when the emotions of the markets are getting stretched in the wrong direction, you would want to master this pattern that is out here. I know that's why you tune in at one of the reasons that you tune in to TFNN each day or tune into the show here at 1 o'clock so we can really get a feel as to what's going on inside of the market. Does that mean that there's not going to be some huge sell-off and scurry going into the close? And logically, that makes sense out here. I don't know. Maybe there is. These are just simply probabilities, but really good ones that help us to identify what the market is really doing out here. So that is the 30-minute chart. Now, for the next, however many minutes, I've got a special person wanted me to go take a look at gold. Most specifically, wanted me to take a look at what's going on inside the mining sector out here. So right now, we've got gold is up 16 buckaroonies, trading out at 1089.80. And if we take a look at what gold is doing, this is kind of interesting out here. I'm just going to put a 120-minute time frame chart because this is just going to show us a very short-term trend out here. Now, we can see the daily and weekly TAS market profiles. The green happen to be the weekly. The blue are the daily out here. And we did see one big, huge, nice nice thrust sometime between, I don't remember, 8:30, 9 o'clock, something like that, between 8 and 10, where gold just simply started moving higher. Finally, it seemed like it got the memo. The futures were off 300 points, and gold was hardly doing anything at this stage. But price did break through that short-term descending trend line out here. And now prices come back to test that level. If gold closes below, it's pretty simple. If gold closes below 1089.40, you got to ask yourself, what does it take in order for gold to get some juice into it, to actually start moving? There's something wrong out there in the Met. I mean, you've got the U.S. dollar index. We like to just stay focused on the instrument that we're in out here. But what more does gold really need today? Right? We're going into a long weekend. It knows that inside the U.S. markets. You've got the U.S. dollar index back 465 ticks, 46 cents, trading out at 98.69. Is there not enough geopolitical fear stuff that's going on out there that maybe could, get gold moving to the upside? It's silver, for goodness sakes, only up 15 pennies right now. Here is what I think is the real telling message when we take a look at gold. We take a look at, here are basically the majority of the mining equities and or gold type positions, silver type positions out here. And if you're watching us on Tiger TV, all the white ones in the percentage change or change, you can see it's 50-50, or maybe it's 55-45 with regard to equities that are moving lower versus higher out here. The ones that are moving higher, that makes somewhat makes sense. If we take a look at the percentage-wise to the upside, you've got Harmony Gold probably dealing with the South African rand out there more than anything else. But this thing is off of its highs. Why doesn't this have the juice? Take a look at Great Panther out here, up 6%. But that's 2 pennies. It's an inside day compared to yesterday's action out here. That's not anything to be excited about. So that's one of the, there's 2 of your most positive ones out here. Goldfields. Let's go see what Goldfields is doing. Not too bad. I mean, volume-wise, it's pushing into the swing from a few days ago that had 5 million shares with 3 million right now. Maybe similar type volume. There is something that is wrong, that is dislocated here. And the question was, hey, should I get into the mining sector out here? When I take a look at this left-hand panel out here with regard to the way that things are moving, I don't see it. I don't see it. Do you see something different than anybody else that's looking out there? Do you see anything different than what I'm looking at out here? I don't see it. There's something that is odd. I can't put my finger on it. But here's what we do know. We can just really get back to basics out here. And the basics are this: if we take a look at the GDX, the entire mining sector out, well, not the entire, but the majority of the mining sector out here, we can see that price is still trading into the September 11 swing point. Now, the good news is that September 11 swing point has got 63 million shares. You've only done 20 million shares today. You're trading inside it on light volume. Maybe the GDX closes above 1328, and if in fact you are inclined to believe that gold and the miners are going to move higher, then if it closes at 1329 today, go ahead and put on a long trade. If it closes inside 1328, then stay put, because 1262 is likely the test. It would be the second day inside of that swing point. And if ever there was a day for things to move to the upside, let's just take a look at maybe even some stronger type names out here. What would be a strong name inside the mining sector? Most people would go for like Agnico Eagle. So let's go take a look at AEM, see what it's doing. Sideways movement. Hasn't even been able to bust out yesterday's highs. Are you kidding me? What's up with that? With gold was trading higher than where it's at right now, and Agnico Eagle hasn't been able to do anything. An inside day. Now, hey, on the bullish side, it hasn't been able to do anything, meaning it hasn't been moving, to the downside out here. If we take a look at Franco-Nevada, I cannot put my finger on this one because, of all days when things should be moving to the upside, man, look at Franco-Nevada. It's pushing lower today. It's basically near the low of its session. Now, it's got some support, potential support. Its TAS daily profile high out here, 45.39. It just seems awfully risky to me at this stage of the game. If you're not in any of these equities, you're not inside this sector out here, I'm just not seeing it. I think you are better off to just simply sit on the sidelines out here. So that's my take. But if you got a different idea, give me a call. Help me out here. Assist me to tell me what it is that I am overlooking out there, because it must be something. Now, Let's go back to the general markets out here. You got the Dow off 447. Let's try to get a feel for what they are and what they are not doing out here. And let's start by taking a look at things individually. First, let's do this. First, this is the New York Stock Exchange. We'll do it for the New York Stock Exchange, the Dow, and the NASDAQ composite out here. Let me go back to 2007, because it's always, how do you know where you're going to unless you know where you've come from? And when we started that first segment of the show, I said, hey, why don't we just take a look at thrusts to the downside off of the 2007 top. That was in the S&P 500. And let's just try to see if some of those moves that we've had right now to the downside, are really falling in step out there. Of course, we saw that big number 10. That's coming to a theater near us, unfortunately, if in fact Stevie's correct on that conclusion out here. But we're now back in the 2007 timeframe out here. We're actually just before the two. The bottom here, there was a nice move down on August 16th. I remember that day because I remember I had been short and flipped that position and flew to Las Vegas and for some show out there, and that was a nice day. Now here's what, and I didn't even know this pattern. I wish I had known this pattern. I would have felt a little bit better. But take a look at when price moves lower. The bottom panel out here happens to be the advanced decline oscillator for the New York Stock Exchange, and take a look at the yellow line out here, the zero line. But when you start to form this structure out here where you're making a higher low in the advanced decline oscillator and a lower low in price, it tells you that move lower isn't real. Let's look at a few more, and then let's come back and see where it is that we're at right now. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So when we went to that break, we were taking a look at the New York Stock Exchange. That is the chart that's on my screen out here. We're taking a look at the upper panel, which is price. We're taking a look at the lower panel, which is the advanced decline oscillator, in this case here for the New York Stock Exchange. And what we're looking for are bullish divergences out here. Those are the green lines. When you see them going in opposite directions out here, they're saying, okay, pay attention. Start looking for the cavalry to show up. And the only way that the cavalry shows up is, they don't just call you. They actually they paint a message on your screen. They gave you a bullish reversal signal out here. And so, even back here in 2006, 2007, back into the August lows in 2007, if you remember, people were kind of freaking out back then. That is nothing compared to, what we're dealing with perhaps right now. Take a look at, another bottom that formed out here in November 23rd, 2007. Take a look at another bottom that formed out here in March of 2008. Take a look at another bottom. Just short, these are short term, but when I say bottom, where price stopped going lower, right? Okay, let's in this case here where price stopped going lower. It either bounced, made a retracement, moved sideways, did something like that out here in the markets. We've got this one in July of 2008. Take a look at the one back in March of 2009. Just take a look at that pattern that is out there. Okay, so we know that that's a pattern that works in all kinds of markets, works in bear markets, works in bull markets. Ain't no bull. It just works all across the board. So now where are we right now? And this is kind of interesting out here. Well, and if we take a look, let's just, again, let's just kind of restate, where are we at? Here's a bottom that was forming back in August of 2014, had that same pattern. The Ebola scare back in October of 2014 had that same pattern out here, right? So let's take us to where we're at now. Forget about the ones at the top, okay, the bearish divergences out here. Now take a look at the oscillator made a reading just a few days ago, January 13th. And if you're looking in the right-hand portion of my screen, it says OSC, oscillator, says minus 276.20. And you can see right now we're at minus 272.71. Look, this is going to be important how the day ends. But what we're seeing right now, even as the New York Stock Exchange was at the bottom of the low of its session out here, that oscillator was still not taking out the minus 276.20 reading. So I've got that little green line out here. So that says something to think about. That's the New York Stock Exchange. If we switch this over to the NASDAQ composite, give me a moment out here. I have to go switch the bottom panel because I don't want to be looking at the New York Stock Exchange. I want to look at the NASDAQ composite. There we go. So we'll switch that over. Now we've got the NASDAQ composite. Here you can see that little rising oscillator, whereas the New York Stock Exchange in essence is flat out there, right? So a wider swath of the market than a NASDAQ composite. Look, I'm not asking you or suggesting to you to go long. What I'm asking you to do is to simply let's go take this one step at a time. Everybody's trying to figure out what are the markets doing. Let's understand what they're doing because what they are doing is communicating to you and I, and these patterns work in all styles of markets out here. So what we know here about the NASDAQ composite is going to be important with regard to how the day ends. But at this stage of the game here, prices have been moving lower, but we even see a rising advanced decline oscillator out here, as of 1:33 p.m. I don't know what it's going to look like at 4 p.m. But right now, where we're coming back into that August 24th area or below it in some indices out here, I can only tell you about the patterns that are associated. Look, it doesn't show up for every bottom, by the way. Okay, and remember, bottom meaning where price is going to stop moving lower out there. So let's make sure that we get that straight. But when it does show up, you don't ignore it, for goodness sakes. If we take a look at the Dow, let's go see what the Dow is doing out here. So let me put that up in the upper panel. Then give me a moment to go grab its oscillator. Now the Dows, I'm not going to put as much weight into it because I believe but we're still going to look at it. Give me a moment here. Give me a moment, Dow Jones. There we go. So as we take a look at it, right? Now, here's the interesting thing about the Dow is the following. Number one, yesterday we covered consolidations pretty thoroughly to help you understand from a long-term standpoint, really it's short-term trading, whatever it is, but certainly from a long-term standpoint, where it looks like the S&P 500, where the Dow is going to, right? And we said the 2007 top. is likely where price is headed to. But as we take a look at right now, the Dow, what it has done, it's made that measured move because the Dow was trading in a little consolidation range from the time period of about October 8th through just a few days ago, back January 7th out here, right? So we take a look at that, and that helps us to identify when you break through it to the upside or the downside. That gives us a price projection. Well, you can see we're just slightly below. In fact, the price of where the Dow is trading at right now is basically at that measured move. We're also in a seventh wave move to the downside. Letter number G, a seventh inning stretch. You and I just took a look on the 30-minute charts out there, how well it's worked there. You think it's not going to work on the daily charts? Really? Why? Why would that be? Now, you got to wait until Tuesday, the close of Tuesday, to even confirm that type of session out here, because it can't continue to extend lower, meaning that seventh wave move out here. But as we take a look at its advanced decline oscillator as well, it is not making lower lows out here. It is making higher lows. Something to think about. So that is, so what is it that I'm saying? I'm saying that the markets are getting ready to form some type of bottom where price is going to stabilize out here. And it may have come in before, just as we were coming on the show, as we were looking at those intraday charts out here. I don't know. If we just simply take a look at, longer-term charts, what happens if the 30-minute chart fails? Does that mean that that's it? It's kaput? It's gone? No, because here's the thing. Look at the NQ and look at the 2-hour chart out here. And we're not worried about the wave counts out here, but look at how price has been moving lower on the longer-term time frame and doing it with less relative weakness out there. Liar, liar, pants on fire. I don't know what that means, but just thought I would say that. Those folks that are sitting there yelling fire out here. Look at the 5-hour chart inside the NQ, which does happen to be in a seventh wave pattern out here. So even if those 30-minute charts fail out there, it's got a lot of backup. The cavalry has a lot of backup out here, and not until all these patterns fail. Now, in this case here, the longer-term time frames, we don't have any cavalry that's arrived. We don't have any bullish reversal signals out here, and you know as well as I do that you wait for the cavalry to show up. But the cavalry's only shown up, I think, there's a piercing candle. It was in the NQ, I think. Yeah, in the NQ, but I don't have a nice reversal signal inside the ES or the Dow out there. So that's my take. Now, if we look at the VIX index out here, if we look at the VIX, you're up 23%. You're up $5 today. Big move, 29.53. The Trend index is right now painted out at 197. If that paints out, if it closes the day at 2.0 or above, that combined with the VIX index, it says bouncer bottom out here. But I am not giving you advice and telling you to step in front of this freight train. If you're a trader, that's a whole different thing out here. But, just pay attention to these patterns that are out here inside of the market. If we go look at, so I had a request to go take a look at POTASH. POT is the ticker symbol. So we've covered gold. We've covered the general markets. We'll go take a look at some ETF structures as well. Take a look at where things are trading. If we take a look at POTASH, this is for Mike inside the Tiger stand, and he's long POTASH. And my advice to him was, hey, what a beautiful thing. Take a look at those patterns out here. Price was moving lower, doing it with less relative weakness, and in the key of G. That says if you're going to take a low, you just put your stop 1 penny below that trading session. When we get back from this break, we'll go take a look at this a little bit further. We'll look at the upside and the downside in POTASH. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So before we went to that break, we were starting to take a look at pot out here, POT, potash, and what Mike knows inside the Tigers, and he's speculating that potash has made its bottom out here. Now, what we know, and take a look at a weekly and monthly chart, right now we've got the weekly chart on my screen. We know that potash has made a 100% move of a move. What do I mean by that? The low in potash, not the all-time low, but a significant low or bottom, formed back in December of 2008. This is a weekly chart. The first week of December 2008, when price got down to a level of 1585. Now, the volume inside potash at that stage was 194 million. This week, we're going to finish somewhere around 48 million. I would say that is testing a swing point with light volume. If we blow this up on our screen out here, what we're going to see is if the session ended right here, right now, you'd have a nice little hammer candle back at a test of a level of support out here on a weekly basis. So that's another positive. You've got a test of a swing point as long as it closes about 1585. If it trades like this right now, doesn't have much movement, you've got a nice little hammer candle in here, sets up a nice possible trade. The monthly chart looks like this. The monthly chart, we're only on, the 15th. We're halfway through the month. If you were taking a look at the volume inside the month, you'd have December of 2008, 756 million. And this month, we're at 95. Now, you want to talk about testing a swing point on light volume. Holy shnikes out here. This one is going. Now, on the monthly basis, you've tested the swing point low. Now, let's go take a look at the daily. What this is probably missing is some kind of sign of strength out here. Sign of strength where we see some kind of nice big volume off of the bottom. Most might wait for that to go ahead and take the trade out here, but I like the setup. I like the fact that on a daily basis, you've got a price was moving lower, doing less relative weakness out there. You got to a seventh wave, and it's just says, hey, stay in this trade. If you get a close below 1550, 1502, this thing may be heading lower. When we say heading lower, if it takes out and closes below 1585 at any point in time, if we go back to the monthly chart out here, there's no reason for this to not go back to much lower prices out here. No reason for it to not go back to a couple of bucks, $2, $3, $4 out here, and you don't want to take that kind of pain or misery. So that is ticker symbol POT. Now, let's go take a look at it. I had a request to take a look at currencies, I believe, out here. So let's go take a look at currencies, see what we have going on. Let's look at the euro, Japanese yen out here. This is a monthly chart. We don't want the monthly chart. Not that we don't want it, but let's go take a look at the daily chart out here. We're not seeing a whole lot of movement inside of the euro, Japanese yen. More sideways than anything else. We know that the euro, Japanese yen has tested its swing point low and has rejected it. We don't have any kind of volumes out here, but it's still trading above that 127.63 level. That in itself sets up, we had a nice little key reversal session out here the day of January 7th. That sets up that this actually could be, if the market does put in a bottom, could be one hell of a bounce. Could be, can I say one hell of a? I think if I do it like that, hell of a, HELLUVA, that I believe that I can say that. So it really could be one, or I could maybe say heck of a, right? So it could be a heck of a bounce out there inside of the market. So the euro, Japanese yen, that's not falling apart, much like the markets are out here. If we take a look at the euro versus the U.S. dollar, what do we have out here? The euro versus the U.S. dollar, still what's interesting about this was the Janet Yellen session. December, I believe. Well, no, was it Yellen or was that could have been Super Mario Day? It could have been Super Mario Day back here on December 3rd. I think it was Super Mario Day. And really, quite frankly, the euro hasn't done a whole, it certainly hasn't given up those gains. It's on that Super Mario Day, it had closed out the session at 109.37 here, 109.56 right now. So it hasn't done a whole heck of a lot. So what, if anything, this is trying to push higher is what that looks like to me. That's inside the euro. If we go take a look at the, what else? Great British Pound, trading out at 142. This thing is basically look pretty horrible. Can you say pretty horrible really at the same time? Does that even make any sense out there? No, but I know that most times I don't really make a lot of sense out here. But it is what it is, right? If we take a look at what the Great British Pound is likely doing, it is likely headed back to its lows out here from 2009, right around the $1.35 level. And if it closes below the lows of May in 2010, that's a 142.29. That's probably what it's doing out here. So about a $1.35. So it's not like the U.S. is on sale like it was back in 2007. Boy, do I remember, I used to own stores out at the Disney theme parks, and every now and then I might sneak away for a game of golf in the afternoon. And Grand Cypress is always a great place to play out there. And so I'd run it back in the 2007, 2006 time frame. I would run it. Mostly was people from the UK that would be over there because they were loving it. Because for them it was a 50%. For those of you that have traveled over there, if you go over and you buy a bottle of beer, it's the same price basically that is on the menu here in the U.S. or a bottle of sake. Goodness sakes, it's about the same price, except when you're doing the currency conversion out here, they were getting it 50 cents off. When I would go over there, it was like paying twice as much for the same thing. I never could get used to that out there. In any event, that's what the Great British Pound looks like it's doing. Let's finish this off by taking a look at the Japanese yen, trading out at $1.39 right now. This is the monthly chart. Let's take a look at a daily chart out here, see what it is doing. It's basically made 100% move. It's got back to its August 24th level. It hasn't actually tested the bottom. Likely will, if it can hold that level, it ought to find support at about 116.19 out there. So that should take care of the currencies. I believe that somebody posted that inside the Tigers Den before I began the show out there. If there's something else that you want me to see, please repost it inside the den for me, because I just have a really small window out there to take a look at what is going on. Okay, so we've covered the markets with regard to pushing lower, and we did it in a calm way, right? Very calm. Taking a look at what the markets are doing, what kind of patterns they're forming, not being, getting rid of the emotion, just putting on some nice music, whatever that music might be for you, and just look at the charts and just stay focus. Be present. Be present with the charts out here. Okay, so we've taken a look at some of the gold. How about light sweet crude? We haven't looked at light sweet crude out here. Let's go take a look at it. Trade out at $29.40. Now the bottom for light sweet crude is basically in or very near to being in, or sure looks like it to me. If you take a look at trend lines, this is kind of an odd-looking trend line. This is a descending wedge out here. It's actually a bullish wedge. And what's interesting, if you take a look at the current contract out here, and we just simply use as our touch point our March 18th low, and we use as our touch point out here our August 24th low, it looks to me like, a while from now we're going to be talking about the January 15th low, because price went and hit that exact same trend line. Now, does that mean that's where price stops? No, not necessarily. Let's look at just time. It looks like the time is fairly well, what would be the term, equidistant in time. Let's go see. I don't know that it is. That would be a 3 drive to a bottom. Now, so the 3 drive to a bottom pattern out here, would actually show up on February 1st. So if this is not the low inside of light sweet crude, then pay attention to the date of right around February 1st. I believe the last trading day, calendar day, is January 29th. So it'd be the 29th. Or the opening perhaps on Sunday evening inside light sweet crude. But right now, forget about the 3 drive. It looks to me like the bottom in light sweet crude is also in. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back folks, Dow's off 419 right now. S&P's off 46. Composite down a $1.37. Let's go out to Massachusetts and speak with Tom. Tom, thanks for calling. Thanks for holding. How are you this afternoon?
I'm doing pretty well, Steve. How about yourself?
Excellent. Thanks so much for asking. And you wanted to take a look at ticker symbol LABU. That is what, the direction shares 3 times ETF for the biotechs?
Yes.
Excellent. Tell me what you're doing, how I can assist you.
Well, I got in a little while ago, 868, and I'm wondering what you think about a little bounce here in the market.
Well, I think everything is set up for the market to bounce. I wish that it was not a Friday, but with a holiday coming. But there's no question that just simply, if we just become calm, take a look at patterns inside the market, it really didn't get much better than that big last thrush to the downside at 1 o'clock this afternoon, because prices, basically charts were moving lower with less relative weakness. Stevie loves that pattern, especially when it lines up with everything else out here. So should the market bounce from here? Absolutely. But are you going to hold? Are you going to hold this over the weekend and rely on China to pick up the ball Sunday night? And
I guess that's a good question, because I got a little money in it now. Maybe I should just take it and run.
Well, what I would do for the day is I would just, first, taking your money is always a good thing. So, there's, like I say, I wish it wasn't a Friday coming into the close, because anything could happen. Come unglued. This is a difficult market. So if it were Thursday afternoon or any other time, we'd be looking at these patterns and we'd say, yeah, there's the markets have put in, from a short-term trader standpoint, have put in a bottom. If you get below, in the case of the NQ, if you get below 4075.75, that pattern has failed. It would be very simple. Inside the LABU, I don't know, what's inside it and the weightings and so forth. And I don't know whether to. I don't see a huge benefit in carrying it over the weekend. If the market makes a huge rally from here coming into the close, that would be a different story. But I don't think
right.
I don't know what we're going to see. But if you were to get that might change your opinion, because then you'd have some pretty decent profit in it. But what I would really do, and I try to, Tom, is I'd really want to understand the top 10 holdings inside there and see what their charts look like too. And I wasn't able to pull that up.
Well, the IBB is, I know it's running off of that, but
is it? Okay. Hey, you've made some money today, on a bloodshed day out there. That's a good thing. Just make sure you don't lose on it. Keep your stop at break even or something. Close it out at the end, and no loss out there.
Maybe take the money and run, I think.
Yeah. Sounds like that. Sounds like a good idea. And buy a nice dinner.
Thank you, Steve.
Alrighty, that was Tom in Massachusetts. That was ticker symbol LABU that he said was traded off of the IBB. If we take a quick peek here at the IBB, we'll go see what their number one holding is real quickly. Inside the IBB, it's Biogen, so that's BIIB. Let's take a quick peek at that, see what it's doing here today. Hey, nice key reversal yesterday inside the IBB, so that's an interesting pattern. Let me see, did it test a swing point with light volume? The swing point here was 2.5 million shares. It was tested yesterday with 2.4. Very interesting. So the number one weighting structure inside the IBB actually looks short-term bullish. Hey, folks, stay tuned. Our man David White, that lovable, squeezably soft polar bear, he's going to be up next on the Tom O'Brien Show. Have a wonderful weekend. And if you're off on Monday, enjoy that as well. We'll be back with you on Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.